I think it is quite interesting point in the market in which there's a lot of still room to international investors and even private investors to participate. Our view is that we have still room for a lot of capital coming from abroad for different types of real estate assets. One of the favorite strategies so far has been value added, which I find is a natural strategy for real estate in which investors come, do the investment in property, do some capex in it, and put it to work. And after some time, they want to realize the change in property values. So that has been placed in the last 2 years, and I think there's still room for keep on that strategy in the Spanish market, particularly, for example, in cities such as Madrid, Barcelona, and also secondary cities. I can think about, for example, Valencia for different kinds of assets, and Seville, and, for example, Bilbao. In terms of the assets, the office sector has been the leader at the same time with retail, but we have seen kind of pick up from hotels investors in which they are trying to catch up with the nice moment tourist sector is having in Spain. We are talking about today about 70 million visitors from abroad, and the increase has been 40 million since 2011, and that's a quite good opportunity. And we used to talk about the startup in the prime sector a few years back, and the secondary areas were like a second speed market. Today I'm of the view that those secondary areas are starting to catching up with prime areas, so there's opportunity there. So 1 year ago we used to say, okay, if you have a prime location in retail, you have an opportunity. If you have the opportunity to add value there, you're going to make earnings in the future, but forget about secondary areas. Now I've changed that view, and I'm seeing secondary areas for main cities in retail and also in offices that are also in the game. So that is a nice opportunity also for investors who want to have that strategy of value add going to secondary areas already in the market.